Good morning to all. I am T.K. Lata Maheshwari, Assistant Professor, Department of Commerce, SF, Fatima College, Madurai. Today I am going to share about working capital. Working capital is the difference between current assets over current liabilities. Formula for calculating working capital: current asset minus current liability. What do you mean by current asset? Current asset is also called as short-term asset, or it is a resource expected to be used to benefit a company within a year or the current accounting period. Examples for current asset are cash, accounts receivable, inventory, and prepaid expenses. What do you mean by current liabilities? Current liabilities are the obligations of a business which is due and paid within a year. Examples of current liabilities: accounts payable, accrued liabilities, etc. In a firm or organization, why there is a need of working capital? It will be explained by using working capital cycle. Let me to explain the working capital cycle. It starts with cash, and cash is converted into raw material. Once again, raw material crosses the stage of work in progress into finished goods, and finally sales. When there is sales happens, it is not immediately converted into cash. There is another one element called accounts receivable or bills receivable. After a period only, it can be converted into cash. So there is a gap prevails between sales and cash. So during that time gap, working capital is most used in an organizations to have the continued productions and smooth flow of business. Now let me go for the different types of working capital. Let us see the different types. First one, temporary working capital. It is the capital required by the business during some specific period or time. For an example, festival. So during festive season, these types of capital will be utilized for a shortest period. Second, permanent working capital. It is the amount of money required to make payment of liability. Gross working capital, the total of the company assets. These assets are basically that can be converted into cash within a year. Net working capital. Net working capital is the difference between gross working capital and current liabilities. Reserve working capital. As the word itself is saying reserve, it is just like a contingency provisions arranged to meet out the uncertainties. Regular working capital. These types of working capital is the minimum working capital as a business needs to run its daily operations. Seasonal working capital. This working capital refers to an increased amount of working capital in a business requires during the peak seasons. Special working capital. A company can opt for additional finance as a working capital loan to maximize the business operational efficiency. Yes, now we can look the advantages of working capital. There are the uniqueness